Welcome back to the Brent Bruce Daily, where each day we take a look and see where home loan interest rates really are, what is making the move, and what to expect for the future. Today is April the 24th, 2023. It's now 6:05 p.m. Central Time, guys. It's busy. It's taken me all day to get a chance to get this report out because I've had my phone ringing off the hook, contracts coming in, things are happening, and the market is now moving as things thaw here after the freeze that we've been in for really like the past 8 months. It's good to see people out buying houses again. And interestingly enough, interest rates haven't really come that far down yet, but we do anticipate that they will here in the next 2 months. We should see a big difference. Now, the first report that we have coming out, the next report that we have coming out is the personal consumption expenditures report, which is for the reading of March. So this is the second most important report that we watch and the favorite measure of inflation according to the Federal Reserve. It's coming out Friday the 28th. So that is our next big day. After that, we go into the following week, and I believe it is May 3rd. We're going to hear from the Federal Reserve as to what they're going to do with the federal funds rate, which is our number one report that we really like to pay attention to, or I guess number one metric that we like to pay attention to when we are predicting where home loan interest rates are going to go. We do expect that to go up by a quarter, but we'll see what type of influence this personal consumption expenditures report has that we're going to get on Friday. So let's take a look and see where we are right now as interest rates have been stubborn, pushing back up against that 6.875% even for a moment last week. Right now, we're up 2 basis points on our mortgage-backed security. But even better, look at this. We're down 8 basis points on the 10-year Treasury and below the 3.5, which is really becoming a psychological ceiling that we want to make sure that we are below. Again, on the 10-year Treasury, we want to go down. On the mortgage-backed security, we want to go up. Here's our chart for the mortgage-backed security. And look, we had a rough time, but began to fight our way back, broke above the 50-day moving average, floated around a little bit, and now look where we are. Interesting that we have 1, 2, 3, 4 ceilings above us before we could really start to have a run back up, and one of those being the 200-day moving average, which we all know, man, the 200-day moving average is very difficult to get above. We've been fighting with the 200-day moving average. If you haven't been watching the show for a very long time, we've been fighting with the 200-day moving average for 2 years. For 2 years, we've been trying to get above. I believe that it's now been 2 years since we have been convincingly above the 200-day moving average. So understand that that's something that we need to break through, and that is going to happen with the coming reports. That is my expectation. So let's take a look and see where we're at on home loan interest rates today. Make sure that you like, subscribe, share, and definitely hit the button there up in the top button, the bell there that gives you the indicator each day when I put this report out so that you can stay up on what's going on with home loan interest rates. Now, this is a very well qualified 30-year fixed conventional home loan with 25% down, 800 FICO score, primary residence. Now, again, we were seeing almost 6.875 last week on this reading. Right now, we're at 6.5% with United Wholesale coming back to the top, a $25 credit. So basically, no credit or cost to get to that 6.5%. Let's open this up and see what it takes to get to that 5.999 that we like to pay attention to. Less than a point. Less than a point. And again, this is another situation where when you think about the improvements that we've had to our mortgage-backed securities over the last couple of days, they haven't been that significant. We haven't had significant benefits to the mortgage-backed security, but yet all of a sudden we see a 50 basis point deduction in the cost of getting a 5.999% interest rate on the Brent Bruce Daily. That just tells you that they are being more aggressive, reducing their margins a little bit, handing it over to the client, making sure that they're out in front as far as a competitive standpoint. So you see how this all goes into it. So let's take a quick look here at where we are on our parameters for the Brent Bruce Daily. These are the parameters of how I come to those interest rates. I want to make sure that I do that for compliance purposes. Make sure that you take a look, and again, subscribe, like, and share. Let me know what your thoughts are, and I will get back to you again tomorrow. Have a great day.